Our show today is called The Average of None. We'll talk about a few big stories of 2021 and how no one experiences the average. Perhaps you've heard us say this phrase before. We say it often, and this year it has been as apparent as ever. First on the list is US stock and bond market. Since the 1920s, the US stock market has on average returned about 10% per year. This year, about 28%, which is certainly well above average. In fact, only during 6 of the past 96 years did we actually experience a result close to the average return. Can the market continue this forever? Well, of course not, but it also means investors shouldn't vacate stocks altogether just because prices are high. The US Treasury bond market, on the other hand, has on average returned about 5% per year since the 1920s. This year, an underwhelming negative 2% for the Treasury bond market. Does this mean bonds are going to be an endangered species moving forward? Well, we don't think so, but we do stress the importance of investing in different types of bonds, which serve different types of roles in a portfolio. Reliability for dollars needed to be used in the short term can be important, and so too is taking advantage of rebalancing opportunities in a down stock market. These are just two examples of how, in our view, bonds can still play an important role in a portfolio. Second on our list for today is the elephant in the room that everyone is actually talking about: inflation. We know based on history that inflation averages about 3% per year. Most recently, we have seen inflation levels closer to 7%, a level we haven't seen since the early 1980s. Although looking at the decade leading up to this year, inflation was really relatively low, trending below 2% for really an extended time period. So now it's no surprise that seeing consumer prices broadly increasing at a 7% rate is making weekly headlines. Elevated inflation plays a large role in our lives. A primary objective of investing for the future is to outpace inflation. Inflation is a personal experience. The way you consume is different from me, which is different from your neighbors. Because of this, we stress the importance of planning for your own personal inflation, not just some broad basket of average inflation. Last on the list, real estate. For many homeowners, their home is their largest asset. An increase here often means people have a higher level of confidence. They feel wealthier and maybe more comfortable spending or consuming more. Now, recent data on home prices shows an annual increase of 19%, well above the long-term historical average of 4%. Now, can this trend continue? Well, this level of increase will be hard to maintain. However, we do have a shortage of homes in the US, and mortgage interest rates remain relatively low. These are just two factors that could remain a tailwind for the broader real estate market. As I mentioned earlier, these are just a few of the data points related to how we really don't often, if ever, experience the average. You may have other items that top your list, and we'd love to hear about them. In closing out the year, we find that 2021 displayed the average of none better than most years. Now, they won't all be like this. However, the main point will hold true into the future. We need to be prepared for events and years that are outside of what is normal or average based on history. They are far more common, and while we can't predict, we can prepare. We create plans together and we diversify across time and asset types, providing opportunities to take action and to help smooth out the bumps along the way. That's it for this year. We hope you have a wonderful New Year's. Take care.